Good morning, tubers. It's Crypto Big Boss. Hey, earlier, I guess in January of 2019, I guess we've had a couple of videos I put out there. They've been very well received. One of those videos was Rules of the Game Part 1. I've had a lot of people ask me, what am I talking about with rules of the game? Um, I'm talking about these cryptocurrencies and how people are looking at charts and looking at graphs and trying to decide, hey, this is going to go up because they saw some kind of special loop-de-loop in the graph or they saw a triangle. In my mind, that doesn't really make sense. What we see in these graphs is a reflection of influencers that are happening with whatever crypto you're tracking. And in this video, I wanted to go through and look at Bitcoin and show just how these influencers are actually affecting that currency and its actual price at any given time. So first, what we're going to do is take a look at what I would call the rules of the game. First, and I'm going to give some credit out there before I show this. I want to go back over here and I want to look at an article by Adam Norrie. It was done in, I guess, about June of 2017 with regards to 6 factors pushing Bitcoin to higher and higher levels. As we all know, Bitcoin went to historic prices in 2017, but these 6 factors outlined by Adam Norrie in June formed the crux of what I think is the beginning of what really affects cryptocurrency prices. So let's take a look. First, we have to know their environment, cryptocurrency's environment for all of what we're tracking. What does that particular blockchain solve? That's what I mean by this first bullet here, blockchain solution. Okay, it's not enough to just look at the price and look at it going up and down. We need to understand what that blockchain actually solves. Okay, today we're going to take a look at Bitcoin. You know, I've got another video out there about Bitcoin. There's hundreds, maybe probably thousands of videos at this point about the fact that Bitcoin is really the people's currency. This is going to be kind of like the major currency that people are using for the purchase of goods and services all over the globe. It solves the issue of there being one major digital currency to conduct transactions all over the world. Okay? Then the next bullet, legislation affecting crypto. Every single country all over the globe has to make decisions about their regulatory guidance that they're going to give to various crypto markets with regards to whether you're going to be able to buy and sell cryptocurrencies. It's up to those countries. If they decide that they do not want their people to actually buy and sell cryptocurrencies, they can put legislation in place that actually stalls the entire system with regards to buying and selling that currency in their country. Some countries think that cryptocurrency poses a threat to their own fiat currency. Other countries feel that it's not stable and presents an opportunity that is not really an opportunity for their folks, and they call themselves protecting their people. Whereas there are other countries, just like the United States and Japan, who have embraced cryptocurrency and are becoming vested in stacking it up and allowing their people to go ahead and buy and sell whatever cryptocurrencies they want. But depending on what country you're in, whatever decisions that these legislative bodies make ultimately affects what the banking institutions and what the companies that actually thrive in those countries can actually do with regards to this particular market. The next one is scaling issues. Is a particular currency going to be able to expand its ability to meet the actual needs on a particular network as more and more people adopt that currency? Or are we going to encounter issues as that coin begins to be adopted? We touched on a little bit here economic and political influence. When a country that was sitting on the sideline decides to make an actual stance with regards to whether they're going to allow cryptocurrency to actually be accepted, it actually affects the market because that affects whether the big boys can actually come in, whether these institutional investors can participate in their particular country. As well, there are countries that are struggling financially and their actual fiat currency is losing value. So when people of that country decide that they want to make sure that they don't lose their nest eggs, this option of taking their money and putting it in the crypto market is a real option. I.e., take a look at Venezuela, take a look at India. Okay? Institutionalized investors. This is where we have the Amazons, the Microsofts of the world, Fidelity, when we have Goldman Sachs, these type of institutions coming in and investing millions of dollars in actually getting Bitcoin and also creating other ventures that are based on crypto markets, things like ETFs, things like ETNs, and pouring money into development projects like Overstock, actually financing Ravencoin. These kinds of things are impact the entire market because there's an influx of millions of dollars being poured in, and it actually creates scarcity for particular coins as they come in and actually accumulate their own stacks. Okay? Then there's media hype. The more channels that cover the evolution of cryptocurrency, and the more it's in the news and the more it's in the magazines, the more people become aware that this is not a passing thing, that the infrastructure is changing and getting ready to adopt to an idea that digital currency is a real mechanism for the exchange of goods and services for a particular recognized thing of value. Once upon a time, people bartered chickens for apples, and they traded wood for maybe corn. They went from that to gold and silver. They use gold and silver now as their monetary solution. They went away from gold and silver and precious metals to actually using fiat currencies in each country: pesos, U.S. dollars, euros, yuan. This type of means. And now here we are at the crux of the 21st century, moving into digital currency as that new monetary solution for the purchase of goods and services. So when we start talking about currency adoption, as these new technologies spread all over the globe, as different companies start picking up these different solutions and using them to actually solve whatever problem it is, there's just no way of getting around it. And what it's going to cause is, as people come in and decide that they need a particular good or service and they accept a particular coin, it's going to evolve into the lay people and the general populace starting to accumulate new wealth to actually be able to participate in using digital currency as a thing in the mainstream. The next bullet I have here is partnering. I probably should talk about leadership first as that last bullet. Matter of fact, I will. Leadership with regards to a particular cryptocurrency is probably one of the most important things. When we see things like what happened to NIM, I'm sure everybody knows about NIM coin and how they are sitting here on the cusp of not being able to pay their developers for the work that they've done. They're about to run out of money. And you think about how that they were hit for, millions of dollars in 2018 as their blockchain was corrupted and pilfered by thieves. And here they are now asking their community for money to help them continue to stay afloat for what I think is a great project. Unfortunately, it's a reflection on the leadership that this particular coin might die even though they have a great solution. Leadership is important. Mechanisms need to be put in place to make sure that this kind of thing doesn't happen. And unfortunately, that's not what happened at NIM. Okay, so then when we talk about leadership, this brings us to partnering. What are the people that lead a particular currency doing in order to make sure that their coin is successful and that it is adopted? Are they going out there and partnering with big name companies to move their solution to the forefront of the people that need it? There's nothing worse than having an actual problem and not knowing that there's a viable solution out there to solve it. And that falls squarely on the heads of the people who are in charge of a particular solution. So going out here and partnering with people who can give you the venture capital and give you the visibility you need is very, very, very important. Lastly, I'm going to cover security. I've touched on this a little bit, but this may be the very thing that causes the entire thing to fall to pieces. We all know what just happened with some of these exchanges where we've been sitting up here, particularly Cryptopia, I guess being the latest, that got hit. And people are stealing Ethereum from folks from their wallets, and other people do not have the ability to go in and get access to the wallets. I have a video on that if you're interested, called Death of Cryptopia. Security is going to be very, very important in the future. If they cannot secure these crypto markets from being pilfered and from thieves, ultimately people will continue to use fiat currency because it's actually backed by the government. But once those security protocols are put in place, not just for the markets themselves, but also for people's personal digital wallets and the entire infrastructure as a whole, I think what we're going to see is mass adoption on a level that's going to be unprecedented. With that, I want to go ahead and show you a timeline of how these particular currencies are affected. Starting back, let's go and take a look first at Coin Market Cap. We're going to look at Bitcoin. Let's take a look at their graph, and let's just span from January 2017. Let's go here. We are. And get a little piece. And we're going to go to January of 2018. Let's just look at this. The run-up of Bitcoin. Okay, that's good. So we can see here that back in January of 2017, you could have bought Bitcoin for $1,000. And we see how it rolled all the way up to its record high in December of 2017, $19,300. And we know where we are today. I wanted to show you historically what happened to Bitcoin, what caused this, as it pertains to the 10 things that actually affect the cryptocurrency market. Here's January. Here's a headline from January 2017. Bitcoin fighting back has recouped a good portion of its early losses. I'll take you to the second paragraph here, or third paragraph, excuse me. Okay, here we are. The cryptocurrency has had a volatile start this year, gaining 120% Then, nearly a week later, China announced it had begun investigating Bitcoin exchanges in Beijing and Shanghai on suspicion of market manipulation. Okay, this is a perfect example of something happening with legislation affecting the price of Bitcoin. Let's go to February. Bitcoin is hovering near all-time highs. Bitcoin surged 20% in the first week of 2017 amid buying interest from China. Then the price tumbled 35% when traders feared China would crack down on the market. Here we go again. Legislation by a particular country affecting the Bitcoin market. Let's come to February of 2007. No, this is March of 2017. ETF denied. Bitcoin price drops from $1,350 to $980 within hours. As you guys know, here we are in 2019, and we're counting down to their decision they have to make at the end of March. Here is a decision that they had to make at the end of February in 2017, and we can see what's happening. Almost immediately after the public statement from the SEC was released to public, Bitcoin price plunged from $1,350 to $980 within seconds. Here we are, influencers, the government influencing the price of markets. Here we got another article. This article is April 2017. Bitcoin jumps to a new all-time high above 1,300, capping 20% April surge. Let's see what they say caused this. Bitcoin surged to new all-time high on Thursday, capping a run more than 20% in April as investors bet that ETF based on digital currency was back on the table. So here we are again. Media hype and public legislation from the government affecting the Bitcoin market. Let's take a look here now. We're going to move on to May of 2017, Bitcoin price analysis, return of the bulls. Here we go again. Here they start looking at these graphs, talking about stochastic is still on its way down to indicate the selling pressure is still in play. This is media hype talking about different market factors affecting the price of Bitcoin. Let's go to June of 2017. Bitcoin tumbles and erases its gains. Bitcoin dropped Thursday. The decline comes after digital currency topped 3,000 on Sunday. The market value of digital currencies overall dropped. Okay, let's take a look and see what they say here. Many investors seem to be using the very recent rally as an opportunity to take some profits while they evaluate market after largest spike in price. Here we are with media hype again. Okay, let's take a look again at Bitcoin in July of 2017. Here we are, they're talking about how scaling is influencing the price. For several months, the main topic of discussion has been the hard fork case. In early July, before SegWit implementation, Bitcoin price dropped significantly, but less than a week before the transition. Okay, they're talking about, can Bitcoin scale? That was one of our rules of the game. Here we go again. Let's take a look at August of 2017. What's going on with Bitcoin? Okay, prices. They talk about a price correction prominent. Here they are again with media hype talking about Fibonacci retracement that extends between the low record on the 15th of July. When you start putting mathematical equations and justifications, I put that under media hype because people tend to listen to that and they look at the graphs instead of looking at what the underlying technology is actually doing. Okay, let's take a look at September of 2017. Bitcoin prices back above 4,000. Okay, after news of exchange shakeups in China triggered a wave of panic selling. Price fell below 3,000 for the first time in months. Here we go again. Actual influence to the market because of what is happening in China. Let's take a look again. Here we go. We're going to take a look at November of 2017. Bitcoin is soaring and on track for its biggest gain. Now let's take a look at this. Bitcoin, the biggest cryptocurrency, by market value surged as much as 10% Wednesday to an intra high of $4,700. It's not much more than it is right now. This is November of 2017. The main driver of the market moves is technical. Bitcoin price has been sliding this month amid a lack of any new headlines. Again, here we go again. Media hype. When they publish stories like this, whether it's CoinMarketCap or Business Insider or Cointelegraph, the media actually does affect the markets. Let's get to the big one. December of 2017. Bitcoin has now surged over 1,500% so far. Recent surge has been driven by the launch of Bitcoin futures contracts on Sunday, which has given institutional investors, there we go, that's one of our rules of the game, access to the new asset. Bitcoin futures sold by CBOE currently have Bitcoin ending January at 18,500. 2 days after this article, folks, Bitcoin would go to the point where it actually is at $19,783, the highest it's ever been. So when we take a look at this and we start realizing how this is put together, we can start seeing that this whole idea of Bitcoin being influenced by these factors or by these rules is very real. It's not rocket science. However, we have to be vigilant as we approach the 27th. It's very clear that this has happened before. The same organizations that were petitioning the Security and Exchange Commission for ETFs in 2017 now have retread their steps, addressed the SEC's concerns, and are about to drop their request on the SEC for a decision. We don't know what the SEC is going to do, but we do know what happened the last time this kind of attention was paid to the Bitcoin market in 2017. If you've enjoyed this video and this type of analysis and are not currently a subscriber to this channel, please go ahead and push the button. Some very exciting things are going to be happening on this channel. I love delving into the hard spots and really getting down to the nitty-gritty so people understand what's really going on. Pop the bell so you can get updates when there's new videos that are put out. I hope you've enjoyed it, and I'll see you on the next one. This is Crypto Big Boss, and I'm out of here.